Boom. Chapter 6. Chapter 6. Mark Douglas, Trading in the Zone. Appreciate you, Mark. For real. This has been good. First time I read your book, wasn't all that thrilled with it. Well, not that it was bad. I just didn't connect with it. Once I started trading for real, I started to trade terribly. Started to realize how much emotions are involved. Book totally came alive. This is like my third time through. This is a good book. So thank you, Mark, for doing it. And let's go over chapter 6. So in chapter 6, Mark Douglas shifts the focus to understanding the market from its own perspective, rather than through the lens of a personal expectations or emotions. The market is a collection of independent events and outcomes completely indifferent to any single trader. Okay. Market is going to move where the most orders are put in place, right? And most trades are positioned. Has nothing to do with hunting someone specifically, unless they're dumping like hundreds of millions of dollars, and that's where it runs. Okay, but that ain't me. That ain't me. Okay, so all right. So Douglas reinforces that the market does not reward intelligence or punishes mistakes. Okay, it simply moves based on supply, demand, and collective actions. All right. To succeed, traders must accept that they can't control the market and they must instead align with its flow by managing risk and probabilities. All right. I think it's in this book, definitely in other books, definitely in Market Wizards, that there is a guy who was a famous technical analysis before technical analysis was even famous. All right. And they brought him in to have him meet up with one of the most famous floor traders. And they said, "We want you to teach this guy technical analysis." And they're like, "Okay." This is when technical analysis was not a thing. So they sit him down. They're like, "Here, teach homeboy this." And he's like, "Wow, dude, I get to teach this guy. That guy is like a legend. But let me show him technical analysis." So he did. And he showed him all his technical analysis, teaching him stuff, levels, this, that, blah, blah, blah. And he's like, "You see that level down there?" He's like, "Yeah." He's like, "We should go down there and we're going to bounce from that level." He's like, "Oh, are we?" "Yeah, 100%. You ready?" So day moves on, day progresses. We get down there. He's like, "Yeah, I get to show my hero my technical analysis." And they get there, and the guy picks up the phone and goes, "Hey, I want you to sell blah 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 of this ticker or whatever, right? This I think it was soybean. Sell it." And it comes down to that level. He made that call, and it just kept going, and it just flushed through that level, and it just kept going. And he's like, "I want you to know, there's thousands of people who can make that call just like I did." He goes, "I want you to remember that when you're doing your technical analysis." And it's like, whoa, mic drop moment, like, and it's so true. How many times have I traded a level and I'm like, we should reject from here, or we should have support from here, and we should blast off. And we don't. Because collectively, for whatever reason, people decided to do the opposite, and there wasn't enough buyers to hold it. There was too many sellers, whatever reason. Okay. We need to remember that sometimes we're wrong just because the demand wasn't there. The supply was already dried up, whatever. Right. We need to just be objective and be like, wow, okay, that level failed. No biggie. On to the next. Okay. All right. All right. So key themes and concepts. The market is always right. The market isn't wrong, even if it goes against your trade. Price moves where the majority of the market participants push it. Your job is to adapt and not fight it. The trend is your trend, or your friend until the end. Right? That's where that comes from, right? That's where that kind of stuff comes from. That's why I trade live price action at levels. And if it's printing a bunch of bearish price action, I'm not longing. There's no way. I don't care if we come down to previous daily low and we sweep under it and then we start to move up a little bit. If we're not showing bullish, like actual price action printing, I'm not interested until we're inverting the bearish price action that was put in. until I see a break of structure, until I've got fair value gaps confirming that we're getting enough participants to move the market back up. All right. Anyway, so you just need to remember that price moves where the majority of the market participants push it. Your job is to adapt and not fight it. All right. The market has no memory. Each moment in the market is unique and independent. That's why I don't look left too much. Of course, I look left and I have my levels, but it's not too much. Okay. Just because a setup worked yesterday doesn't mean it's guaranteed to work today. I think I can say I've done this long enough and I've worked on enough teams, and I've worked with enough indicators and blah, 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 that if there was a repeatable strategy that worked 100% of the time, I would have found it. Okay. And whatever. That probably not. I don't know how many different kinds of setups there are, but I don't think there is one. I've never seen an 80-90% strategy that just holds, right? Unless the like risk to reward is just so ugly that you lose money. I had a friend who put a video out on YouTube and was like, here's my 80-90% win rate, and the R&R was trash, and that video blew up. And then he posted his true like 50% win rate, and everybody slammed him for that one. Everyone thought the 80-90% win rate was like the most amazing golden strategy ever. People were so stoked and excited. And then the true 50% win rate that had a good R&R, the one that he used to make money, everyone made fun of it. It was mind-boggling. I was like, what? I was like, no way. And I went to the comments. I'm like, sure enough. Okay. Anyway, that's just, hopefully that speaks to somebody. Okay. Because I used to be that guy that was hunting the golden strategy. All right. And now actually the lower my win rate has been lately, the more money I make. I'm closer to a 50-50, probably like 60% win rate. Sometimes dropping into the 50s, sometimes a little lower, but that's usually for a short burst. And I make more money. Go figure. It's like the more I was willing to lose, the more money I was able to make. I don't know, man. It's like these concepts that these, people like Mark Douglas and Jared Tendler and, Tom Hogard, it's like they're right. That's weird. It's not so weird. All right. Past outcomes had no influence on the next trade, much like the roll of dice. So the idea for me is I have dice that I'm bringing to the market, okay? And they're loaded. They're loaded dice. They're weighted dice, okay? Maybe not like super weighted where I'm just like win, 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 win every single time. But they're weighted just enough for, probabilistically speaking, that I should win. That's my edge. That's why I come to the market, because I feel like I have an edge that just gives me a slight advantage over the house, right? That's what's hard, is understanding that. But I know that I need to lose about half the time for me to win the other half and be profitable. All right, anything can happen. Every trade is just one event in a endless stream of possibilities. Okay, so I think this is huge. I mean, some of this is repetitive. I know it's repetition, but you gotta let this sink in. Every trade is just one event in an endless stream of possibility. Like, just imagine taking dice and rolling it and expecting to win every time, right? Like you're playing Yahtzee and you just like want to Yahtzee, bam, 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 every time. It would never happen, right? You're expecting a certain amount of losses. When a poker shark, what's his name? Mickey Mays, goes to a casino and he's playing poker, playing cards, baccarat, whatever, and he sits down at the table. He knows he's going to lose sometimes. He knows it. I think baccarat's like a 50-50 game, right? But he has a statistical edge in his mind. So he knows how to play that edge to where he knows he should win in the long run, not the short. So every hand he plays, he's not like, this is my winner. Oh, this is my winner. Oh, it's another loss. Oh, this is my, he just plays it. And he's just like, yep, that one was a loss. No big deal. Moving on. Boom. Next hand. Let's see how that one goes. It's a bunch of, single hands that are played over a stream of possibilities. All right. So you don't know which trade is going to be the loser or the winner. Your edge, in your edge, but it plays out over a series of trades. So, I talked about the 20 trade challenge. Take that and play it out, and just make sure you only do your strategy for 20 trades and see how it plays out. Right. And for those overachievers, 30, 40 trades, 100 trades, whatever. All right. So control versus probability. Traders fail when they try to control or predict the market. I've seen this so many times. All right. You take a loss and you're like, I need to study why I took that loss. Okay. No, man. If it was your strategy and you took a loss, so what? Take the L and move on. Right. It's hard to say. There might be some emotion involved in there. So what? Journal it and be okay with it. All right. So the correct approach is to define risk. Okay. Execute consistently and let probabilities unfold. One of my first mentors told me to risk 0.25% of my account. Back then, I'm like, what are you, crazy? It's like, man, I'm trying to retire by Christmas. What are you talking about, 0.25%? I can risk 5 to 10% and be fine. Ain't nothing. That is a very dangerous and very immature outlook on risk. I promise you. Okay. You don't want to be anywhere near anything above 1% unless you were like you years in and you understand your strategy and and believe, and you don't have emotional, like big emotional outbursts and stuff, right? Because in a 50-50 strategy, you can take 7, 8, 9 losses. It's unlikely, but it's likely to happen eventually. And if you're risking 10% and you take 8 losses, you just lost 80% of your account. Okay, so if you're trading prop firms and you're risking like high percentage like that, it's only going to take a trade or two and you're smoked. Okay, so risk is huge. All right, execute consistently, and let the probabilities unfold. Okay, I think that's the hardest thing for people. That's why the 20 trade challenge. Just do 20 trades, forward testing, sitting at your charts, take your 20 strategy trades and see how it plays out. All right. So thinking you know what will happen creates emotional attachment and blinds you to other market signals. All right. So when I come in, for me, with a daily bias and I feel like we're bearish and I'm only going to take bearish setups, and then we did the opposite and it goes bullish all day, and then I look back and I'm like, dude, like the market was telling me it was bullish 100%. And I just ignored that all day because I had a bias. I don't do that anymore. I really don't. I allow it to tell me what it's going to do in the interim and like right now. Okay. But when you come in with a bias or you think you know what's going to happen, you get an emotional attachment to that because that's your ego now attached. All right. Let me go into a Discord community. I'm in several, and be like, I'm calling we're going to hit this level today. Let me do that. Let me see how that feels with my ego when we either get there and I'm like, yeah, look at me. I called it, baby. Or let it not go there. How am I going to feel? Let's be real. I feel like a fool, right? That's why I try not to do that. Now, I will say I believe the market is going to get it, move its way towards this liquidity, right? I do make those kind of calls, but it may not. It may just fall away from that and come back a month later to touch that liquidity. And then I can be like, yeah, look at me, I was right a month ago. No, I'm just kidding. I'm just joking. But yeah, you can emotionally invest in things like that. And that's not where you want to be emotionally invested. You want to be emotionally invested in following your strategy. Okay, sorry, moving on. Aligning with the market reality. Professionals think like a casino. Each trade is just another roll of the die. I've thought about doing the dice roll. Like, market open. It's like 10 minutes before market open. So I roll the dice and it's like long or short, you know, and just see what happens, and like just trade that for a little while and do proper risk management and see if that'll actually work out. Um, anyway, I don't know if I want to touch something like that because that might create like a gambling mindset, and I really don't want to. But understanding that I have a strategy, I have an edge that's slightly in my favor, and I'm just rolling the dice when it plays out to see what happens and be like, is this one a winner or a loser? Market, you tell me. Okay, I'm not going to make the call. I'm good whether it wins or loses because over time, I make money. Okay. By focusing on the process, entries, stops, and managements, you align with how the market actually functions. So you can put your mindset where it belongs, right? You can really actually start to focus on things that matter, which is your correct entries, your proper stop losses. I mean, how many of you guys get stopped out because you're putting your stop losses too close because you went in too heavy and now you're risking like 800 and you know you should only be risking like 200, so you're like trying to do the best you can to move that stop loss up. It comes back, gets you, and then goes your way, right? That also comes into the risk management, right? With the proper risk management, okay, you can align with how the market actually functions, right? So trying to force trades or will the market into moving your way is a losing mindset. I have pleaded with the market before, like, please just give it to me, please just let it go. Like, I've done all this, guys, I really have, and I have to make sure that I don't continue to do it as well, because it's tempting. It really is tempting to get there and to just want to plead, right? So try not to force your trades. Try not to will the market in your direction. Just allow the market to move, and you participate with it under your edge, right? Under your defined edge. So let's go over some practical lessons for this. Stop fighting the market. If a trade goes against you, it's not the market's fault. It is simply how probabilities work. One, I do think you need to take responsibility for the loss, right? But don't beat yourself up, okay? If you played your strategy correctly and you take an L, don't try and fix it. Just be like, yeah, that was one of the L's. You know, it'd almost be like if you took a piece of paper and you have a 50-50 winning strategy, you can write 20 wins, right? 20 W's on a piece of paper. And then in another column, you do 20 L's. And then you would just reach over and go, well, that was one of the losses. Check. You just cross one out. The next day you get a win. So I'm gonna cross out a win. And then the next day you get a win, cross out a win. Next day you take an L, you take an L. Next day you take an L, right? And so you see what I'm doing here. Now you have a piece of paper where you're just crossing off if it was one of the W's or one of the L's in a collective sense. Okay. That helps you keep the mindset of, was this a win or a loss? You know, like it just allows your strategy to play out, and you're just identifying if it was one of the winners or one of the losers. As long as it was your actual strategy, you don't care which one it is, because you know over time that strategy should play out. All right. So detach emotionally from price moves. That this can be hard for people. This is where I recommend the 1 week challenge of you don't trade, but you watch the entire week objectively. You don't make calls. You don't bearish or bullish. You simply watch price action. You simply talk about what is actually happening on the chart, but you don't talk about where you think it's going to go or how you think it's going to react. You're like, oh, we're at a level. Okay. All right. What are we doing from here? Okay. Well, we went above the level and then we came down. All right. I see that. Oh, we printed a bearish fair value gap. That's cool. I wonder what's going to happen next. And then you just objectively watch the market. I'm telling you, game changer. And people who have done it have DM'd me back and been like, I can't believe how well that worked. It's like it changed the whole way I look at everything. I was like, I know. And it's not like I came up with it. It's not like I'm some genius. Someone told me to do it, and I'm like, that's stupid. And they're like, no, please. Okay. Wow. You really believe that'll do something? Yes. Okay. And actually, I've done it, I don't know, 5 or 10 times over the course of a couple years. Okay. Price action isn't personal. Don't take losses as attacks on your skill or intelligence. Don't let it bruise your ego. Just was it one of the W's or one of the L's? You're going to take a bunch of them in your scenario. So which one was it? That's all you're identifying. Okay. Adopt a casino mindset. I get a lot of pushback on this. Like I'm in some communities and I'm like, all right, just recognize you're in a casino. This is not gambling. It's only gambling if you don't win, and blah blah blah. It's investment. I'm like, okay, come on, man, like for real. Like, do we really need to revisit like dopamine hits and like how your brain works and how a slot machine really works for your brain when you pull the lever? I was like, dude, like this is a casino. This is a casino environment, and the faster you can recognize that, the faster you can become an actual gambling shark, someone who is able to bring a edge to a table and statistically play it and go on you, the house, I'm taking your money, is mine now. Okay, until you're able to at least recognize that you were on a virtual video game prop firm casino, the house has you where they think you need to, like they have you where they're gonna make money, in my opinion. Okay, all right, moving on. Hopefully I don't get slammed in the comments for that, but I'll take it. Just if you disagree with me, let me know. If you agree with me, let me know. All right. Your edge is like the house hedge in a casino. Over many trades, probabilities play out in your favor, but no single trade matters. Okay. I think a lot of times we put way too much on a single trade. And if we're like double downing on, um, you know, um, like our trades and like revenge trading with big account, like big risk. Okay. Obviously, that single trade matters, but it shouldn't with proper risk. Okay. All right. Focus on risk, not prediction. Sounds familiar, but seriously. All right. Successful traders do not know what will happen nest. Okay. They don't know what's going to happen next. They only need to manage risk and execute their system. Okay. I hope you guys realize that I say this a lot of times and I can see myself in my little, recording there. And it's like I'm almost saying it to myself. Like, stop predicting, play your edge. Like, seriously, I'm not just talking to you, I'm talking to me too. Okay. I'm not above this stuff. All right. I've been above it, for short sprints and enough to feel success, enough to move past like being that like super crazy boom and bust trader who doesn't make money. But this is stuff I still work on consistently. All right. So understand that I'm speaking to me just as well as you. I just hope that this is helping you and encouraging you in the right mindsets that's going to help you actually apply your strategies and become successful. And that way you can flex on these casinos and be like, pay me, give me that payout. Let's go. All right. Reflection questions. Let's get deep. Here we go. Deep into the psyche. Do I take losses personally? Yes. All right. Sorry that just came out. Like for real. Sometimes I still do, and I shouldn't. I don't know why I struggle with it, man. I have such an ego. That's anyway. As if the market is against me. All right. I can tell I'm super stressed if I start talking to the market. Like it can hear me. It's like I want to make a phone call and go, hey man, hey, can you just like this one time just let this trade play out? Because if you don't, I'm gonna lose this funded account. Okay, you're not gonna let it play out. Thanks. Bye. Hang up. Like, all right, I'm being silly. Do I focus on predicting trades or managing probabilities? That's a big one. Okay, am I thinking ahead on like my next 20 trades, or am I just thinking this one trade, everything relies on this one trade? This one trade is going to define me today. If I lose this trade, I'm going to feel like garbage. I'm going to be grumpy. And if that's you, you need to take a step back. Okay. I've been there. I've smoked accounts. I remember my first funded account, it was like the next day. I mean, I smoked that sucker. I was either going to make a $10,000 payout or I was going to burn it. And then I found out you had to have 5 consistent days anyway, so I wouldn't have got it. But I was ready to YOLO, man. I was breathing all over that dice. Like, Anyway, I told you guys I like risk. I think it's fun. I'm a surfer, inline skater, anything with adrenaline, motorcycle riding, yeah, day trading. Anyway, um, how often do I let one trade affect my emotional state for the next trade? All right, this is big. These days, I really do much better on this. But if I lose a trade, I might just take a minute and reflect, right? And I try not to carry any emotion into the next trade. Simple as that. Okay, but if this is you and you're carrying emotion into that next trade, it's something I highly suggest you work on. And just start by simply journaling it. Journaling alone fixes things like a lot. It doesn't fix everything, but it fixes so much because it helps you become emotionally aware, and then you can see like a trade going to your stop loss, and you can start to inject logic to be like, that's okay. I'm gonna take my little pen. I'm gonna come over here and go. This is over here, one of the L's, and I'm okay with that. You can start to help yourself before things happen, and you never know. Sometimes the reverses goes to W, and as long as you don't allow that emotion to be like, yeah, I knew I couldn't lose. Let me go in big on the next one, right? Like I won $700 on that trade. Well, if I can run 4 micros instead of 2, I'll win 1,400. Yeah. Okay. Anyway, you guys get what I'm saying. Like for real, journal this kind of stuff with yourself. All right. Am I truly trading like a casino, focusing on the long-term outcome over a series of trades? Think about it. A casino wins because, dude, why do you think casinos give out free drinks and free this and free rooms, and you know they'll just pamper you. If you're winning, they will come and pamper you because they want to get you excited. They want to get you all riled up, and they'll just like, they know we're gonna get it back. Watch, he's gonna give it all back. You just watch. That's their edge. Play the emotions. Okay, action steps and exercises. Casino exercise. Here we go. Let's hit the slots for some practice for day trading. All right, I'm just kidding. Write down how a casino thinks about probability and risk. I actually studied casinos, like legit studied actual casinos and how they work, how they function. There's some weird stuff. Okay. Sometimes they cheat. I did study prop firms too. Prop firms, I know a lot of people like, they're like, oh man, these prop firms really want you to be successful. I'm like, no, they don't. Like, they're giving you an opportunity to be successful, but they don't want you to be, because you're taking from their bottom line. Now they understand there's going to be a certain amount of people who are successful that make consistent payouts that they have to write the check to, but they're not happy about it, or they just know that's the cost of doing business, because they know 90% of traders will fail. That's going to fund them and us who are successful. Okay? It's worth studying. It's worth looking into. All right. Compare this to how you currently approach your trades and where you are being emotional instead of statistical. Could you imagine like a dealer getting all freaked out and like emotional and making bad decisions, and and then like someone's playing them, and like like a real true poker shark, and that wipes out? Dude, that casino is going to come in and be like, either you're going to be serving drinks, or you're going to be working at a new casino, or you're going to get like, you're not going to be working here, because we can't have you doing that, right? Same thing. Have the same conversation with yourself. Okay. Trade outcome neutrality for your next 10 trades. Okay. At least 10 trades. Focus on whether you executed your plan and whether the trade won or lost. But you're not like trying to figure out why it lost, or even why it won. You're just playing your strategy, and you're just going W or an L. That's it. Which one is it? 50-50. Which one is it? A W or an L? A lot of people are like 50-50 strat. I'm clicking off this. This guy don't know what he's doing. I need me an 85% win rate. Well, good luck with that. I actually used to close I closed between 65 and 85%. And when I allowed myself to lose more, I started making more money because my R&R was higher. I don't know what to tell you. the better loser I became, the more of a winner I actually was. I don't know. It's like Tom Hogard and, Mark Douglas, and these people know what they're talking about. Maybe they know. Maybe we should learn from them. All right. Score yourself in execution, not P&L. I'm just going to leave that statement out there. I'll highlight it for those that are looking at the tiny screen on their phone, trying to read that. I'll just read it one more time. Score yourself on execution, not P&L. Okay. Affirmation drill. Before each session, repeat. Anything can happen. My job is to execute my edge and manage risk. That's it. That's it. If you're at a casino and you're a Baccarat player and you have a winning strategy at Baccarat, are you going to go play the slots? Are you going to go sit down at Texas Hold'em? You'd be crazy. If you were a consistent winner at Baccarat, what are you doing at the other games? If you have a strategy that you believe in, and if you don't have a strategy, hit me up. I'll give you one. Like, legit. I'll give you mine that I trade all the time. Okay? I can give you the orb strategy. Just go look up orb. Now, there's a lot of different variations, and you might have to, narrow one down that works. But for the most part, the orb works. Opening range breakout. There you go. And you trade it, market opens. Go do it. Okay? So go and do these things. Play it forward and just focus simply on your strategy, nothing else. Okay? Before each session, repeat. Anything can happen. My job is to execute my edge and manage risk. If you're a Baccarat player, play it. If you're a slot machine wizard, you play the slots. You're not going to go give your money away at Texas Hold'em. Okay? Stop strategy bouncing. Find one that works. Stay consistent with it. Even if you have a losing strategy and you can get your mental game absolutely under control, and then you start to adjust your strategy to make it a winning one, you're just going to like bulldoze right over things, and it's going to be amazing for you. So anyway, if you need a strategy, reach out to me, whatever. It doesn't matter. Discord down below. It's free. Probability visualization. Look at your last 20 trees. Man, what am I thinking of Minecraft right now? Be punching 20 trees. So 20 trades as one set. Okay? To look at your last 20 trades as one set. Not the last day or two or week. Look at things more broadly, okay? A casino knows that people are going to go on win streaks. But they know, because of the games they designed, the tables that you're sitting at, that if you continue to keep playing and you don't have a defined edge yourself, you're going to give it all back. And they're going to win. They're going to take your money. Okay? We need to flip that table. Play our edge. All right? So calculate the win rate and ask myself, did my edge play out overall? Okay? Overall. How many W's did you cross out? How many L's did you cross out? Overall. All right. The market has no agenda. It is not out to reward you. It simply moves, and your job is to align with its flow. That's why I'm a live action price trader. Of course I look left, but not very far. Usually not past the previous day. That's about as far as I go. Now, if there's a big monthly level or weekly level, sure, I'm paying attention to it. But yet again, when we get there, I'm not making a decision based off of that past price action. I'm looking at how we're reacting right now. What price action are we printing at this moment? Okay. So align yourself with its flow. Again, this video is a little long, but man, I really hope this has been helpful. These are super helpful to me. I know I say that in some of these videos, but they are. Share this out far and wide with people that that will benefit from them. And I'm telling you, get this right. Find a half decent strategy. It doesn't even have to be that great. With this correct and a decent strategy, you're going to go kill it. So I'll see you guys in the next video.